This video is going to cover the third element of the nature of a business, and that is profit, and discuss the fact that most businesses are operating to try to make a profit and the importance of that to those businesses. Okay, that's something we'll just cover in class. So profit, a main activity of a business is to sell its products to its customers. No secrets there, I don't think. We've spoken in class about a number of businesses such as Uber, such as ReadyGo, and these types of businesses. Why were they established? Well, it was to try to sell a product to its customers. That product might be a good or it might be a service. The business receives money, i.e. in the form of sales revenue, from its customers in exchange for its product. So Uber charges you to take a vehicle to be driven, I should say, from point A to point B, and they generate sales revenue as a result. ReadyGo charges you $2 an hour to ride their bike. That's sales revenue that business is achieving in order for you to use their service. At the same time, however, as most of you learned in Year 10 Commerce last year, a business has to pay its operating expenses, so the day-to-day expenses. So for Uber, for example, it needs to pay its drivers. For ReadyGo, it needs to maintain its bikes, replace lost helmets, potentially fix damaged bikes also, and maybe fish them out of dams or places they've been dumped. If revenue is greater than expenses, then the business has earned a profit. So if TR minus TC, total revenue minus total costs, is positive, then that business has made a profit. Clearly, if it's negative, then unfortunately that business hasn't run at a loss or made a loss. And you can see that little diagram there just showing that in an effort to increase profit, as you can see here, the business is going to need to drive an increase in revenue, rent more bikes, have more people take Uber trips, for Uber Eats, deliver more meals, or decrease its costs, i.e. pay their Uber drivers less. Probably wouldn't be very popular, but it's an option. For ReadyGo, for example, try to encourage people not to damage bikes, not to dump them in creeks that are going to need salvaging, for example. And if they can do those two things, then that business should be able to increase its profit. This is just included this because we need to be always coming back to our income statement, because the income statement is the financial statement that calculates or helps calculate profitability, and some of the key elements here that relate to profit. So firstly, across the top, if you remember from Year 10 Commerce, you've got your sales. So this business, for example, this toy store has made $630,000 worth of sales. Then they have incurred $250,000 of cost of goods sold. So that to make those $630,000 worth of sales here, they had to their stock, and the purchase of that stock cost was $250,000, which led to a gross profit of $380,000. The business then also incurs other additional expenses on top of these stock-related costs up here, such as advertising, cartage, the phone repayments, monthly phone payments, etc. Those costs are then deducted from the gross profit, and this business is profitable, and it's made $268,200 back in 2015. So this business has successfully delivered or sold products to customers. Its profit is positive because its total revenue is greater than its total cost, and it has achieved its objective. Don't forget that there are always businesses out there that are not operating for a profit. So charitable businesses, private schools, for example, and they're there to break even. So basically where their total revenue equals their total costs, and they're not making a loss, and they're not making a profit either. The next video will focus on employment.